Hello everybody, and welcome to this video where I want to talk about the 3 stocks that I plan on buying this October and can keep adding to these stocks. And I also want to talk about one stock that I'm going to be selling at the end of this video. So let me get started with, October. October usually is a good month. Usually it should be a good month towards the end of the year. We're beginning that process where stocks could recover, which is why I want to double down on my top positions. Well, not double down because that'd be like 60%. Tesla is 30% of my portfolio, but I definitely would be comfortable getting that position to higher than 30% given the opportunity that I see for Tesla. In my view, EV adoption is as certain of a thing that we're ever going to get in investing. Governments around the world are pushing it. The technology is getting adopted. Teslas are becoming the new iPhone. They are becoming the computer on wheel. And every in my daily life, I see more of them. I see more of them. I see more of them. That product is getting adopted, and it makes sense for me to put the large majority of my portfolio in the hyper growth stock that is the most sure bet, right? The most of a sure bet. And this is just my view. This is just to me. This is no advice. But frankly, Tesla is a bet as sure as it gets for me. And I wouldn't go 100%, but could I go half? Would I be comfortable going half? Absolutely, absolutely. And so I'm adding to my position right now. If you look over the long run, of course, Tesla is the number one performer in the stock market over the past 10 years. And even if you extrapolate this to 13 years, you're at 46% average annual return compounded. And arguably, this compounding has just begun. Tesla market share is roughly 5% of all vehicles sold, and 65 to 70% of EVs. That's the market share. And if you believe that most cars in the future will be EVs, which to me is a no-brainer, it's going to happen, then, the question one has to ask themselves is, does Tesla have a shot at having even just 25%? If they have 25%, that's their target. That's their 20 million cars sold per year is exactly 25%. There's 80 million cars sold per year now. In fact, 20 million, that's going to be a little less because the economy is still growing. People are still getting richer in nations around the world. And so we still see a growth of the pie in adoption of car. We'll see how that goes. Some people claim there will be less cars in the future and cars will be shared. But in my view, this is not going down. In my view, this is just going up. The adoption of cars in general and the replacement of gas cars by EV, of which Tesla will be the major provider, or the biggest provider of EVs. They're going to get adopted for so many reasons. They're getting adopted because they're so much cheaper than gas, less maintenance. You have the IRA, you have the tax credit. They last longer. They're already more popular than, say, the Toyota Corolla. They're a step change in technology compared to gas cars. They don't pollute. Pollution is one thing, but there's clear links between pollution and cancer, so that removes that. They disrupt the gas station. You don't have to go to the gas station anymore. They disrupt the dealership. They even go as far as putting tiny things like giving you a dual trunk and a frunk, so now you have more space. The range is not an issue either, right? The range for the new Model 3 is 421 miles, so that's major range, just as much as any gas car, as the same as a gas car. And there's short-term catalysts too for Tesla, which make me bullish. I want to buy before the stock rises again because it will reach all-time high again in my view, and I want to buy before. And what I see is the Cybertruck. Remember what Elon Musk said. The demand is so far off the hook, you can't even see the hook, right? And so unless you believe he's lying, I don't think he's lying. CEOs have a fiduciary duty. So I don't think he's lying. He's been optimistic about deadlines before, but that's going to happen. And, I want to make sure I get in before these things happen. And of course, the $7,500 tax credit is going to be at the point of sale. In early 2024, January 2024, that's going to be at the point of sale. So that's, in my view, definitely going to trigger some sales. So I'm more than happy to keep adding Tesla at these levels. I consider Tesla to be cheap relative to its potential 10 years out and relative to the long-term guidance that we have for Tesla. Remember, it's 20 million cars by 2030, which would equal to roughly 50% growth until then, and they are well on track to reach that target. Moving on for Enphase. Enphase is my second biggest stock position. My second position proper is an asset, and it's Bitcoin. So if you think of this as asset, it'd be the third one as far as pure stocks goes, is the second biggest stock. I believe in solar. Solar is the future. It's the cheapest form of energy. There is no cheaper form. You may have seen one of the videos I made recently about how in many countries a solar panel is cheaper than plywood. And this is true. This is true. And of course, you're not limited by solar panels just on your roof. We have places in Europe where they start putting solar panels on walls as well, not just the roof. This is the cheapest source of energy. Putting solar or solar panels in general, they are a stock. They are not a flow. You create a stock. They are mini power plant. Each of them is a mini power plant, and just all it takes then is to multiply these mini power plants. And what better company to create these power plants to allow us to harness the power of AC current versus DC current that they produce. Solar panels produce DC. You got to transfer that into AC. I believe Enphase is the winning solution for this. And the more I look into this, the more it is clear to me that Enphase is the winning solution. We live in an AC coupled world. We don't live in a DC coupled world. Every interconnection that we do at the grid level is an AC connection. And in fact, when you think deeply about this, every connection that we do within our home is also an AC to DC connection. Think about everything you use. Think about your laptops, your phone chargers, your TVs. It's all AC to DC conversion. So we're already doing this. We've already decided that the AC to DC conversion needs to happen earlier in the process of energy production, which is why I do not believe that DC coupled are going to be the solution long term. I own SolarEdge, and you may know the whole debate between Enphase and SolarEdge. So the debate is the solution, they're a duopoly essentially, and the debate is the solution that is going to win solar. Is it going to be a DC solution, a DC coupled solution, or an AC coupled solution? I.e., do we do the inversion after all of the electricity is collected and transferred to the battery, or do we do the inversion before? And I believe we're going to do the inversion before, because that's what we do in our process. That is what we do in our process. You have fewer losses when you transfer electricity, and that's how the grid is built. And I often take this example of Roman villas. Roman villas were the same width as our roads today and our rail as well, our railroads. It's been 2,000 years. It's a standard. They were a standard established 2,000 years ago, and you don't change a standard that easily. Which is why, if you're being consistent with the whole efficiency argument and that we should use DC, then why don't we have all of our homes using DC? Anyways, I don't want to get too much into the weeds. Solar is getting adopted. It fits my style of adopting really, really well. These systems are, 4% in the USA, 10% in Europe. Europe is growing very, very, very fast. And, the whole idea is you try to invest when the product is early on, and you try to get out of stock when the product is adopted everywhere. And, right now, when I go in my neighborhood, I see about 10% of roofs with solar panel. Lots of my neighbors have solar panels, but it's 10%. In my view, it's going to get to 80%, 90%. And that's when I'll be interested in selling a stock like Enphase, when they are done equipping the 83 million single-family homes in the United States. They have just begun this process. And the more expensive energy gets, the more people will want to have solar so that they don't have to have energy bills anymore, and they can just move to self-sufficient electricity production and produce everything at home. And keep in mind, the performance of Enphase has been great. 27%. That's after this 58, 59% crash that we've had. I believe this stock is heavily undervalued today. If you look at it when it's not in its undervalued phase, Enphase actually has returns over the long run, right, over a 10 plus year period, over 40%. It's that return over 40%. It tracks Tesla, it trails Tesla. It's right behind Tesla. So I love Enphase very much. Let's talk about the other stock that I'm buying before it gets expensive in 2024. I always pay special attention to making sure that I get position sizing right. To me, getting the position sizing right is important. You may have the best cost basis in Bitcoin or in Tesla, but if you've never had it higher, the size of that position may not matter. So Bitcoin is my second biggest asset that I have. And of course, most of my Bitcoin is held in the form of a brain wallet, and that's what typically the Bitcoin community will recommend. Now, I don't recommend anything, I just do entertainment, but typically the Bitcoin community will recommend that. But the reason why I want to talk about MicroStrategy, and MicroStrategy is my proxy for Bitcoin, is because I see a benefit in owning layer 4 Bitcoin, owning Bitcoin whose ownership is force removed from you. And that benefit is the idea that you have a stock now that is trading on all of the platforms out there, and you can either write put options or write call options based on that. Some people like to earn income like that. I happen to don't think it's the best strategy. My better strategy is a beating denominator strategy, which is to be able to borrow against it at some point in the future. The whole buy, borrow, die methodology. I mean, it's a little grim to say it like that, but it's the methodology that pretty much everybody I know in tech does that. It's how you avoid borrowed money is not taxed, and so that is kind of how a lot of people do it. In California, what a lot of people will do is they have $1.5 million house. It just gained another $500,000 in value, and you draw on the ELOC, and you increase the ELOC, and you use the ELOC for your living expenses. And of course, the money you get out is not taxed, right? Mark Zuckerberg famously did that in the early days. He was already a deca-billionaire, and he borrowed money against his shares to buy his first house. It doesn't matter. I think it's the smart thing to do in this system. And anyways, I don't have enough time to get into the specific as to why Bitcoin is not a bubble. You need 10 hours to understand. I don't have enough time to answer all of the single rebuttals, but I've heard them all. I have heard all of the rebuttals, and there is a response to all of them. In fact, I haven't found an argument against Bitcoin that I find relevant, and I am looking for one. And maybe you can put it in the comments section. And if it's irrelevant, if it's relevant, I'll reply to you. But if it's something I know, anyways, this is a huge community, heavily covered. Bitcoin is heavily covered. In a nutshell, I think Bitcoin is important in my view as a hedge against the dollar, a hedge against the US dollar becoming kind of schmucky, with a hedge with the US dollar taking the way of a Venezuelan bolivar or the Argentinian peso, which is something that could happen, and that gives you that protection, that gives you that edge that bonds cannot give you. And also with Bitcoin, you remove counterparty risk. Always remember that any asset that you own over in Bitcoin, you don't necessarily own it, right? If you own a bar of gold in your hand, someone can take it by force. If you own real estate, the local government can say, we're going to build a highway on your land, and they can take your land by force, right? It's called eminent domain. If you own stocks, ask yourself, do you actually own the stocks, or do you own them in street name? Most of the time, the stocks you own them in street name. You don't have that stock certificate. They're mostly owned by firms like ComputerShare. You don't really own these stocks, right? If there is something that were to happen, you don't really own them. Bitcoin, you own it in your mind through a string of 12 words or 24 words. You just remember those words, and it's in your mind, and it can't be taken from you. So it's a unique asset because of that. It provides protection that nobody has. No other asset has. And let's keep in mind about one thing about Bitcoin, of course, is that we have three main catalysts coming. The first catalyst is, of course, the halving. The second catalyst is, of course, the ETF, the spot ETF. And the third catalyst is gap accounting. Gap accounting accepting fair value accounting to Bitcoin, which means that at some point, MicroStrategy will have to restate their earnings once Bitcoin goes up, and it will look like they've made billions of dollars in one quarter. And we'll see what the market has to say about that. We'll see if the market will actually do its research. And, these things get reported verbatim without any digging, right? If you don't sell the Bitcoin, you didn't make a profit. MicroStrategy is very clear. They're never going to sell the Bitcoin. They are going to be this asset. And if you've watched any interview from Michael Saylor, you know the conviction of Michael Saylor is second to none. What's the stock that I'm streaming? It's not a complete sell. I want to say that first. But the stock that I'm streaming, and whoa, I know I'm going to get some bad comments on this. The stock that I'm streaming in is Palantir. And don't get mad at me. I know there's a big Palantir community out there. But Palantir will likely not be a top 10 position for me anymore. And that's going to be soon, perhaps as soon as tomorrow, if Tesla drops, which I really hope Tesla drops. I hope the numbers are not very good and it drops, and it's a great opportunity to buy. Analysts are only predicting 19% forward revenue growth over the next 12 months for Palantir. It's fine, but it's a little low. You know that when it entered my spreadsheet, it was at 30%. I don't enter a stock in my spreadsheet, and I don't consider owning the stock if the growth is not at least 30% revenue growth. And keep in mind, so that's 19% forward revenue growth predicted, and the earnings, enterprise value over sales metric, which is my favorite metric to value growth stocks, is 16x. Now, when I compare, say, Palantir to a stock in a somewhat related field, right? Cyber security. I mean, it's entirely different, but it's IT. It's still IT, and it's still a major IT company. Is CrowdStrike. If you look at CrowdStrike, IT company, recurring revenue, so in many ways better than Palantir, a bottom-up sales approach. They're trading at a 14x times sales, but the big difference between CrowdStrike and Palantir, of course, that's CrowdStrike is growing twice as fast and has given us guidance that implies that they will keep growing twice as fast for between 5 and 7 years to come. This removes a lot of risk when the CEO gives that long-term guidance. Palantir had given 30% guidance in the early days of them becoming public, but ever since, Alex Port kind of took it back. And I still believe in that original promise for Palantir. I think over the long term they'll do fine, but stocks do not live in a vacuum. They do not live on their own. They live in relation to other stocks. And this is a stock, Palantir, that I was buying heavily in the $6 and $8 range when, you may remember a year ago, the world was going to come to an end. All growth stocks were crap. All new issues were crap. Nobody wanted to buy those. You may remember that a year ago. Ridiculous valuations. So I was very happy to buy in the $6 to $8 range. But, it's more than doubled now. It's more than doubled, depending on whether you bought at 6 or 8. It has more than doubled. And there's a stock that I like more than Palantir. In fact, it's my second biggest position. I've just discussed it. It's Enphase. I like Enphase much more than Palantir. And Enphase is down 58%. So the way I look at this is one share of Palantir buys me 4 times more Enphase today than it did a year ago. So to me, it's a no-brainer. And I'm sorry to be trimming a little bit of Palantir, but I'll say the final good things about Palantir, which is why I never want to completely exit the position, is Palantir is a order of magnitude better than the competition. It was founded by Peter Thiel. The concepts of Palantir are important concepts in the way business is run. I don't think Palantir is a great sales organization, but when you really think about it, so Peter Thiel and Elon Musk, right? They were together at PayPal. I mean, okay, Peter Thiel fired Elon Musk, etc. There's some confrontation with the two of them, but they have the same way of thinking about business. And Palantir, just like Tesla, they're for the long run. They're going after the long run opportunity, and they are similar in the sense that whether it's Tesla or Palantir, they're not that, I mean, the marketing for Tesla, a lot of people argue it's not that great. These are not people, Elon Musk or Peter Thiel, that believe that good product needs marketing or good product needs sales team. They believe good products sell themselves, because if a product is 10x better, it sells itself. And I fundamentally believe that too over the long run. Over the short run, it's a different story. And anyways, that's kind of where I stand on Palantir, and I'll be trimming some more Palantir. So I'm done with this video. This was not investment advice. This is just entertainment. I hope you were entertained. I appreciate your likes. I appreciate your subscribes. Thank you so much for watching, and have a wonderful day.